Morning, Steve Freed in Chicago with the morning grain comments. Well, overnight we saw nearby beans a little bit lower, corn lower, wheat mixed with Chicago down and Kansas City up. As far as the news over the weekend, first of all, there was shower activity across most of the parts of the western belt, let's say from Kansas and southern Iowa across Illinois, Indiana, and into Ohio. Still raining today in parts of Nebraska and across the Delta. We should see some showers move across the Midwest this week. On Friday, we got a pretty good rally, especially in corn, because it looked like the long-range maps was going to put a ridge of high pressure over much of the western corn belt, June 18th to 20th. Today's maps don't show that ridge. They do show some ridging in the southern plains, June 21 through 24th. So we'll have to watch and see if that bubbles into the Midwest or if it flattens out like the last day of the panel shows in today's run. We also will be looking pretty closely at news out of China that they may have suspended issuing import licenses for U.S. DDGs. This is an ongoing thing with one particular seed variety in the United States that has not been approved imports into China. So the question is, number one, is this true? Number two, how long will this last? And number three, the longer it lasts, will it back DDGs in the United States and help solve the old crop soybean meal situation? So we have the July-November bean spread just kind of sitting on some key support, and whether we break that down, we'll see if the market actually begins to think that we have resolved the old crop U.S. supply situation. This week we get a new USDA report, monthly supply and demand. They're not expecting to make a lot of changes into the U.S. or world supply and demand. Trade will be watching to see if they raise old crop U.S. soybean demand. Does that make the carryout smaller? Or do they actually plug in a negative residual suggesting last year's crop was understated? Do they lower the U.S. corn export numbers a little bit because we're just not on pace to satisfy their goal? And what do they do to some of the world numbers? Do they raise world wheat? Do they look at global corn demand maybe slowing down a little bit? And do they lower the soybean imports into China? So a big report day coming up this week, and we'll watch and see how the market reacts to that. The funds have to roll out of their July positions, and we'll see if that lowers the open interest, or if we just keep their and roll their longs looking for some kind of summer weather rally. As always, these are my thoughts and not those of ADM and ADM Investment Services. Have a safe and profitable trading day. Eli, so